Growing your practice is exciting and nerve-wracking, and it takes money. How do you figure out the financial needs of growing your practice? Well, my guest today helps startups get off the ground and get on track to become a successful practice, and she's going to share some insights with us. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. The mission for both is the same, and that's to help private practice owners stay private. Not only is that what they want, but care is better when the provider owns the practice, because that's when they're going to have the most freedom to make the clinical decisions they think are best. It's different when somebody else owns the practice, because usually their agenda eventually starts to creep into the provider's ear, and nobody ever gets harmed, but it can force some compromises. And why have those when the patient ought to always come first? So let's help them stay private and just keep other owners out of there altogether. And my guest today is Diane Tarshis. Diane is founder and principal of Startup Distillery, a global consultancy where she provides one-on-one startup consulting and business planning that gives first-time founders the clarity and guidance they need to fast-track profitability. Since graduating from the Wharton School and leaving the frenzy of Wall Street behind, Diane has spent 20 plus years helping entrepreneurs from all walks of life build growing businesses. Some of her clients have become leaders in their industry. Others have made multi-million-dollar exits, while still others have simply created a life that gives them flexibility and financial freedom. But one thing they've all had in common is this: they refused to leave their success up to trial and error. Diane, thank you for coming on and sharing your insights with us about this topic. Big topic, big deal.
Carl, thank you so much for having me. This will be
Yeah,
fun.
it will be fun. And I want to start with every guest before we get into the meat of the topic. We need to get to know you a bit better. The bio that I just read that you gave me has to be short for an intro. So fill in some of the background. I'm curious how you got into this line of work. Starting up is hard. Helping startups is also its own challenge. So how did you get here?
Indeed. I'll try to give the short version here, which
Sure.
is I was a college student. I went to Wharton undergrad, and sophomore year, I was like, I have some time on my hands and I don't want to join another club. And I
You
found
had
out that
time at Wharton? I wouldn't have
I
put those two
did.
ideas together.
College, you have a lot of flexibility.
Yeah.
And so, there are your classes and
Yeah.
activities, whatnot. And there was extra time. And I found out there was a research center on campus that was a joint venture between the SBA, the Small Business Administration, and the Wharton School. It was called the Wharton Small Business Development Center, so
Okay.
SBDCs. And there were a number of them affiliated with universities around the country. And I ended up becoming the first undergraduate consultant. The whole idea of the joint venture was to have Philadelphia area business owners consult with Wharton students. And it started with grad students. And then I became the first undergrad. And I had never been exposed to entrepreneurship before, and I loved it.
Hmm.
Um, but when so I worked there for 3 years, and then when I graduated, I felt like I really wanted to work in industry, get some real
Right.
experience. So
Right.
I worked on Wall Street in New York. I was in investment banking for several years. Then I moved to Chicago and ended up working in operations and manufacturing. And I come from a family of department store retailers. And so I
Wow.
have retail background. So this sort of multidisciplinary kind of
Yeah.
thing going on. And being a woman of, I don't know, my generation, the opportunity to be a hands-on mom and have a career really wasn't an option. And
Mm.
so I decided to start my own business. And so 23 years ago, I started Startup Distillery.
Okay.
So that's how that happened.
And it's been that ride ever since.
Yes, indeed. Lots of fun.
Wow. Yeah. Um, so let's get into it. Very broad questions. We're talking about the financial needs of growing a practice. How do you figure that out? How do you figure out what that number needs to be? I mean, you're standing here today, you're looking out into the future. I used to work for a guy, he would say, every forecast is wrong. Just don't
Right.
know where or how. So with all that
Right.
uncertain, like, how do you do this?
Most of the people that I encounter are, in fact, all of them have been experts in what they do, but they have never built a business before.
Hmm.
And Surprisingly to me, every client I've had, or just about every client, has not been thrilled at the prospect of dealing with the numbers side of things. I even had a client who was a hedge fund guy. He ended up coincidentally starting a distillery
Okay.
in the UK.
Okay.
And he's now the largest producer of whiskey in England. Um, but uh,
Wow.
but let me tell you, he did not want to deal with the numbers. They were
A
just
numbers guy who didn't want to, who would evaluate the
they
numbers
were
of
freaking
businesses
him
he
out.
might invest. Wow.
And so, it really comes down to this aversion. And then also, a lot of founders really make the mistake of mixing up what accountants do versus what startup founders and finance people do.
Okay.
So, accountants are looking backwards. They're looking at history, what happened, perhaps why.
Hmm.
Um, and trying to get answers from that standpoint. Whereas when you're building a business, it is extremely important to also look forward and forecast. And
Hmm.
that's what financial projections are all about. So that's where I come in. That is something that I think is extremely important in order to define, frankly, what your goals are, your financial goals, and then developing strategies and tactics around that of how to reach them, as opposed to if you're only looking backwards, you're sort of on the path of inertia. You're just going to see what happens, and
Yeah.
and I'll do my best and I'll work my hardest, and that ends up not optimizing the opportunities that you have. So,
Yeah. You you nailed it. It's the goal, right? Because um, if you say, I want to be $1 million practice in 5 years, that's a very different thing you have to do than if you say, I want to be a $500,000 practice in 7 years or whatever it is. Like I said, I run a marketing agency. And so a common question of prospective clients is, how much bigger do you want to get and how quickly? And it's a tough question, but I
mhm.
just want to grow. And then I have to say, look, if you want to, the reason the question's relevant is if you want to, double in size in 3 years, the marketing plan that requires is different than if you want to grow incrementally over time. So, can you give me some direction on, but there it is. Otherwise, you're just kind of, I don't know.
Well,
You're never going to know
it's
if you're there.
inertia,
Yeah.
right? And the way I think of it is when you have that goal, um, you can reverse engineer how you're going to get there.
Hmm.
But if you're just sort of passively going forward, then there's really no strategy other than the sort of, I want to say, the winging it,
Yeah.
trial and error kind of stuff.
Yes.
It's hard to be strategic when you don't have the big picture in mind.
Right. You're just kind of more willy-nilly.
Yeah,
Yeah. And maybe it'll work. But you won't know because you don't really have a goal. So
yeah.
after you pick a goal, then like what are the next couple of big things that ought to be looked at from a financial need, would you say?
Um, the financial goals tie in very closely with the conceptual goals. I mean, so in other words, when I'm doing business planning work, whether
Hmm.
it's a formal business plan or just a blueprint, which is like an informal version,
Hmm.
um, it's really a matter of what do you want your business to be in terms of your lifestyle, in terms of your financial goals, in terms of your interests and what excites you, the things you like to do versus the things you don't like to do.
Hmm.
So that ties in very closely with the financial side of things. And usually I start with the conceptual stuff,
Okay.
um, so that you can the founders can actually make the decisions as to what they want their business to look like and what they want it to be when it grows up. So,
Right.
um, and then the numbers are there to support the story, the
Okay.
concept. Um, but it really does all start with the conceptual stuff in my mind. So pinning
How
that down.
how often do when you ask, because those are the right questions. How often do your clients look at you and go, I don't know. I don't really know. I just
You
know I want to
know,
do this.
most people were they rarely say that because the people who come to me have a vision of some kind. They may
Okay.
not have all the answers, but but they've got this general idea, this big dream, this big vision. And then I may ask these pointed, detailed questions, but it's something where when I'm working with clients, it's very conversational. And so somehow we're able to zero in on what it is that they're really thinking and dreaming about. What does this look like? And if there's some part of the business where they're like, God, I hate numbers. I really don't want to deal with them, since we were just talking about
Yeah.
that.
Yeah.
Um, it's not that they have to become an expert, but they need a working knowledge. And then we can figure out people that they can hire, or, different options for backstopping that. Or if they say, man, I hate marketing and sales, I'm not good at that. And then
Right.
they hire someone like you
Right.
who can help them, as opposed to them trying to wear all the hats and do everything by themselves.
Right.
So
Do you ever find that say the financial goal doesn't at all match up with kind of the conceptual? Do you ever see that? There's sort
yes, absolutely.
of, I wonder if you can give us an example, and then what do you do? One of them has to change, right? Or they have to sort of meet in the middle somehow.
Right. So if I have let me think back. So I have had clients where they make products.
Okay.
Gosh, I'm trying to think, a good example is I have a client who was making kombucha.
Okay.
And so and we were going through some of the conceptual stuff of how they're going to get the word out,
Mm-hmm.
and that they had these lofty goals. And uh the question, there's so much that goes into it.
That's
There's
okay.
so many steps in between. I want to
Sure.
say, what really happens is we dive into I want to say the nano, the
Okay.
real nuts and bolts. So
Yeah.
how are you going to fine tune your recipe?
Mm-hmm.
Uh, let's do some guerrilla market research here and go
Sure.
to the local park and um, give out free samples and interview people.
Sure.
Or I want to sell X number of units in some unreasonably short amount of time,
Right.
and have
Right.
a reality check type of conversation of, here's what the industry standards are, or here's what I've seen before, or here are the obstacles that you will need to overcome.
Right.
Maybe it's tough to get in with distributors or something. And so
Right.
having those conversations in
Mm-hmm.
order to be the reality check.
Got it. Okay. So it happens. I want
It
this,
ha-
but the
it
roadmap
ha-
I see to get there just isn't going to get me there.
it happens often enough. Usually, um, usually the people who come to me are not completely unreasonable, because they
Mm-hmm.
have business experience. So
Okay.
I'm not dealing with the 20 somethings.
Mm-hmm.
I'm dealing with people in their 30s, 40s, 50s, and even 60s.
Mm-hmm.
And so, you know, their feet are on the ground. They've
Right.
had practical experience in
Right.
the world. So
Okay. So you sort of kind of segued into this next question a couple of minutes ago. I mean, the question is, so now you're growing. What are the main financial levers any owner really needs to have their finger on the pulse of? Not like your accountant knows every last number or can access it, but it just seems to me there's certain things any owner, any practice owner ought to know,
yes,
or at least have
I
easy access to. They understand the number, they understand its importance, and so on.
I think that there are three. I'm going to geek out a little bit,
That's cool.
but I think there are three financial spreadsheets that are extremely important for any founder or business owner to know, to
Mm-hmm.
understand. And I do want to say I pride myself on the fact that all of my clients walk away understanding these spreadsheets and how they work, because I want them to use them, and I don't
Mm-hmm.
want them tied by the apron strings to me. I
Mm-hmm.
want them to be able to do things on their own. And so um, it's really important that they understand how they work together. And so those three spreadsheets are the profit and loss statement,
Mm-hmm.
the cash flow projections,
Mm-hmm.
and the sources and uses of funds.
Okay.
So, in my mind,
Mm-hmm.
cash flow projections are the utmost important. Cash is king
Yes. Yes.
for a reason, because if you don't have enough cash on hand, your business will fail.
Yes.
Whereas you can be profitable, which is something you see on a profit and loss statement,
Mm-hmm.
still go out of business because you've run out of cash. And that conversation is for another day, and that is much longer.
I had a previous guest. He's like, we have clients say, how come I'm making a profit, but I don't see any, where's the cash if the profit's there? And it was a few
Right.
pivot. Yeah. So
That's a
it's pretty,
so
pretty
listen to
common.
that episode.
Yeah. And then come right back to this one.
Yes, and then go back to this one. And so and the way these work together, the profit and loss statement is important in terms of setting pricing to
Mm-hmm.
make sure that you're maximizing your profit,
Mm-hmm.
and that you're not pricing things at a loss. I can't tell you how many times, even before I started my business, I worked for a company where we bought another company, and they kept the owner on, and it was a popcorn, it was called Canfections. It's not
Mm-hmm.
around anymore, but it was those popcorn tins.
Mm-hmm.
And he was selling those like gangbusters. And only once we got our hands on the financials did we see that he was selling every unit at a
At
loss.
a loss.
So,
Wow.
um, or uh, I have people come to me and they are telling me their pricing, and they haven't included their own time and their own
Mm-hmm.
labor in their pricing. So, so the P&L is very important.
I see
The
that with a
cap,
lot of marketing agencies too. It's yes, just not, I'll say crisp on the costs. Yes.
yes,
Yeah.
yes. And then cash flow projections, as I'm sure you know, I mean, just seeing the flows in and out in in a nutshell, timing is everything. So
Mm-hmm.
you have to see when the cash is actually hitting your checking account and
Mm-hmm.
when it is actually leaving or your bank
Yeah,
account.
and in private practice, my God, if there's insurance, I mean, a
Right.
good
A
number
delay,
for accounts receivable is about 30 days. If you're hitting 30 days consistently, you're in a good place.
that's short,
So the
right?
revenue cycle people tell me, and like, all right, as long as you can plan for it. But you hear these horror stories of six figures sitting out there for 90 days, longer. You
Exactly.
don't even know. And it's, oh my God.
I think the healthcare industry is really, really tough when it comes to that,
Hmm.
because there is such a long runway
Yeah.
waiting period. And
Yeah.
so it is so critical to plan for that, to make sure that there's enough capital. And that's teed me up for talking about the sources and
Source of,
uses of funds.
yeah.
So that is the spreadsheet that works in tandem with the cash flow projections
Hmm.
in order to show what the startup costs are. So if you're opening a practice for the first time, or just a brand new practice, then knowing how much you're going to have to spend on equipment and furniture and fixtures, and your initial marketing budget as opposed to your maintenance
Hmm.
marketing budget. And I'm trying to think of what else. So that's on the expense side,
Hmm.
computers, important one-time purchases that are related to your
Right.
starting up your practice. And then where are the funds coming from to fund that?
Hmm.
Um, the the for me, the interesting piece on the uses side of the sources and uses of funds is also how much money you will need to run the business, to operate the business until you become reliably profitable.
Hmm.
That is actually key, because if you don't have enough funds for these initial startup expenses, plus that period of time until you reach profitability reliably,
Yeah.
and sustainably,
Yeah.
then you will run into a cash crunch and you will not be able to keep your doors open. So,
Right. Right. So a couple of follow-up questions. First one is, I expect you, when you said the three, I expect you to say balance sheet as the third, not sources and uses of funds. How come? You're shaking your head like, nah.
Yeah. Um, Balance sheets are about assets and liabilities. And when I'm not saying it's not important, it's just not one of the top three.
Okay.
Um, it is something to keep an eye on as you are running your business, but in that initial startup phase, you need to make sure you have enough capital
Mm-hmm.
to actually launch and operate until you reach that
Right.
sustainability point.
Right.
And that can be captured in these three
Okay.
spreadsheets. So,
And then the other one is, so pricing is a lever, so
mhm.
I think about if, so I'm the founder, I'm the entrepreneur, got 16,000 things. My joke is at any given time, I have 16 things happening at once. 16 things are open, not yet closed. And if one closes anyway, so it's a lot to keep track of. Are there like a handful of like, financial levers that I, they need to be top of mind? Because if they're not, then I'm going to be in trouble just simply by not looking at them. Pricing is obviously one. Are there a couple
Right.
of others or what would you say?
I would pricing for sure, and understanding when you're looking at the pricing, identifying all of the elements that go into your costs. So,
Yeah.
people who are selling products sometimes forget about the packaging,
Mhm.
or, but
Maybe
anyway,
for so if it's reimbursed, healthcare, then your pricing's kind of sort of set to a degree. There's some wiggle room depending on the size of the practice and but it gets sort of set for the year.
but that's
Yeah.
only one. The other thing I was going to talk about was
Yeah,
revenue streams, and that's only one type of revenue stream.
true.
So if you're a dermatologist, you have a dermatology practice,
Hmm.
and you have all of these products that you sell to
Yeah.
your patients, or just clientele in general,
Hmm.
um, then um, I would say it's important to keep an eye on that aspect of the business in terms of what's profitable and what's not, what's
Hmm.
selling, what's not.
Hmm.
Is it is it actually profitable for you? You want to make sure that it is. Just
Hmm.
because you're bringing in the product and it's going out your door, I actually have no experience in that place, in that industry, in terms of knowing
Yeah.
um, the profit margin there. So,
Hmm.
um, if it's taking one of your staff members an incredible amount of their time to sort of keep track of the inventory or whatever, are you calculating in that cost?
Hmm.
And are you still profitable after you account for it?
Yeah.
I mean, I'm just sort of making this up as I
Yeah.
go, but um, are there gift certificates that you could sell?
Hmm.
And holiday time is approaching, and so that might be a good
Yeah.
time to make the push. And so it's really sort of taking the step back to really think about what opportunities do I have for new revenue streams in
Hmm.
addition to my patient practice.
Yeah.
So
Do you look at like sort of your expense base, my term, as like a proportion of revenue, or just because on the one hand you have to like spend ahead of revenue, especially when you're starting out. But if you're growing and you say, well, I want to, you've got to spend today to earn tomorrow. Do you look
right,
at that too? Like it, because that can get out of whack.
absolutely.
Yeah.
Absolutely. That is one of the other important levers,
Hmm.
because it's important to identify all of your ongoing expenses. So if you're giving out, I'm going to continue with the
Sure.
dermatology example. And if you're giving out free samples that, let's say, you had to pay for
Yeah.
to customers, I'm going to call them customers because they may
Yeah.
not be patients, but you're giving out free samples and you haven't baked into financials,
Hmm.
your financial projections, that you are spending money for those free samples, then you've got a leak
Yeah.
in your financial picture. And
Hmm.
so that is really important. So, also, Costs of things change.
Mm-hmm.
Inflation is increasing these days, and so
Mm-hmm.
it is a matter of keeping on top of the cost of things going up.
Mm-hmm.
Certainly, cost of things go down. You're spending money on things you're not using. You need to stop them. It's sort of like we're all in this phase where we all have a million subscriptions
Yeah.
to apps and things,
Mm-hmm.
and so you want to make sure whatever it is that you're using
Mm-hmm.
you, you can keep, and that it still fits within the budget, and things you're not using, you're actually canceling it.
Yeah.
Uh, and then you want to make sure that there's not a new expense that you haven't missed that you've forgotten about. So,
Mm-hmm. Sources and
um,
uses of funds. Now I see it.
um,
Everything should
um,
be on there, right? So are we
yes,
using
well,
this? Are we using that?
sources and uses of funds is for your initial, I should have clarified that, is really for your
Ah,
initial startup expenses. So that's
okay.
really where's the investment money coming from? Is it a bank? Is it investors?
Got
Whatever.
it.
And then what are those initial one-time startup expenses? So your initial grand opening marketing campaign,
Mm-hmm.
maybe it likely will be a lot more expensive than your sort of maintenance
Got
marketing
it.
campaign.
Got
Uh,
it.
so
Okay. Okay. And the obvious answer to the next question is always, but so you have a spending plan, right? A forecast. You have to have one, especially if you have a goal. And then reality happens, right? And so the question is, how often does spending planning match spending reality? And with the obvious answer being practically never. What do you
I,
do? You
I
know,
would venture to guess absolutely never.
absolutely
But
never. Yeah. I used to work for a guy who said, well, that forecast, every forecast is wrong. You just don't know exactly where, but and he was right. So what do you do?
so here's the thing. It's I explain a lot that when clients are looking for outside funding, it is incredibly important to understand one's financial projections. That being said, everyone knows that
Mm-hmm.
they're not going to be accurate.
Mm-hmm.
They're not going to be correct. The point of the entire exercise is to prove that you understand the numbers and how they work together. So those
Mm-hmm.
levers that you were talking about,
Right.
it is important to understand that if you increase your marketing budget, it will have this kind of impact on your revenues.
Mm-hmm.
That if your um, rent goes up, it will have this other kind of impact on your bottom line.
Right.
It is a matter of when you're forecasting revenues, where did you come up with those numbers?
Mm-hmm.
So it is a guess, but the key is to make it an educated guess and to be
Mm-hmm.
able to defend the logic behind that estimate.
Right.
It's not about being right. It's about thinking about the nuances of your industry and your business and in this case, your practice,
Mm-hmm.
in order to make it defensible, as opposed to, I don't know, it seemed like a good number.
Right.
Or I talked to the guy down the street. He has
Yeah.
a practice, but if the dermatologist is talking to another dermatologist that has a different focus,
Yep.
then that's not really helpful.
Yeah.
So um, that's really the key is what's the thinking behind the
Mm-hmm.
estimates.
Mm-hmm. And then as time goes on, now you've opened, so your forecast is now live.
Right.
Do you do like it's very tactical, but monthly meeting? We need to review, how are things going? We thought it'd be this way. Is it that way? And are those good reasons or not? Do we need to adjust? You do those
Carl,
sorts of things.
you're right on the money. It is very important to look backwards too. That's why it's important to get these reports from your accountants or your software or whatever it is that you're using,
Mm-hmm.
and to compare what your forecast is like versus what the historical is like,
Mm-hmm.
so that you could see if, for example, there is a leak, like, oh, shoot, we haven't been
Yeah.
accounting for the fact that we're giving out all these free samples,
Mm-hmm.
or the pest control company raised their prices and we didn't include
Right.
that and adjust our pricing accordingly. Or
Uh, a doctor went on one of the, I had to go, I had to miss 3 days because my kid got sick. And so I had to
right.
reschedule all those appointments, or, Yeah, just to know what's going on, or something more structural, or
You're not hitting your goals. If you're not
finding new
hitting
patients
revenue,
has taken a lot longer than we thought it would.
yeah,
Yeah,
exactly.
yeah,
You know,
for whatever reason, or a competitor opened up. Yeah, anything. As long as there's a reason and explanation,
right.
then you can figure out if it's something you have to deal with or not.
And
Understood.
it's yeah, crucial to figure out what the reason is. So
Right, right. Um, we could talk so much more about this. Talking about startups, it's hard to sort of get it bite-sized, but here at Practice Care, we're about the bite-sized kind of advice. So a couple of wrap-up questions I ask every guest.
okay.
First one is, we hit a broad topic. Is there anything you think I should have asked you in the context of what we covered that I just didn't ask you?
Uh, not that I can think of. I'm sorry I didn't clarify the sources and use of funds
No, that's all
earlier
right.
in the convo,
What
but
is the shelf life of that? I mean, after 6 months, a year, 2 years, you're like, all right, that one's, we don't have to look at that anymore because it's not useful to us. Because you said it was really at the startup phase.
it really is. And so it only comes into play again if you're embarking on a major growth strategy of some kind,
Okay.
or adding a new division of some kind.
Hmm.
Um, so that's the only thing I can think of. Something where you're going to, whether it's self-funding or you're looking for outside funding, you're going to need um,
Yeah.
invest these major sort of one-time expenses.
Yeah.
And how are you going to fund that? And then how long will it take until it becomes sustainable? So
Yeah. So when the founder contributes their own money or family money, do you find that they forget to put that on the sources and uses? Like they forget to include themselves as a source?
no, well, we're doing it together because I
True.
do the financial projections together. And
Yeah.
so I'm saying, okay, where's all the money coming from? Because technically the way it works is that the way the spreadsheet works is the total sources needs to equal the total uses.
Right. Makes
And
sense.
so when they don't, if all of the uses add up to something and the sources adds up to something less,
Yeah.
then there is a problem and they know they need to come up with more money. And the
Yeah.
question is where and how. So,
Yeah. Part of the reason I ask is I had a flashback when I launched Market Advisor Group. It was self-funded. And a couple of years in, my accountant said, there's a loan that you have to pay back. Well, what do you mean? Well, you loaned the
oh,
company the money. As, oh yeah,
uh,
there's kind of two of me. And then he showed me the number. I said, there's no way. There's no way. And then he's here it is. Like I'm like, holy cow. I just
yeah,
wasn't, I mean,
that's the owner mindset. That's the I'm
yeah.
paying myself mindset. I still remember a colleague introduced me to somebody who was a jewelry maker and she had this shop
Hmm.
and I was like, so how do you price your jewelry? And she said, well, like this ring, it costs $110, or I price it at $110 and it only costs me $10 to make. And I'm like, well, how's that? And she wasn't including the rent on her
Ah,
or paying herself or utilities or any of the fixed costs associated with her business. So
mhm.
she thought she had this huge margin. I'm like,
Yeah.
and it's not
It,
the way it works.
I
And so
know.
you forgot you need to pay
I
yourself
forgot.
back.
It was always like this, I have to pay myself, but it was startup and whatever. I worked it out so that like we were not homeless or anything. But when he showed me just the grand total, the amount of money that over time I had put in, it's like, there's no way. There's no way. And it was there. It was true.
You
I
know
was
what?
like,
I,
holy
I will,
cow.
if we have time, you can cut this out if you want, but I do engage in what I call some magical thinking on my own.
Okay.
So I've been working with a web designer for almost the life of my business, so for
Hmm.
20 something years. And whenever I need him to redesign my website, it's just a heart-stopping amount of money. And so I tell him, I say, you know what? Just bill me monthly. I don't want to know what the total is. And this is so anti the way I,
Yes. Yes.
I
Do as
think.
I say, not as I do,
But
listeners.
it's the only area where I do that. I don't do
Oh,
that
well, okay
across the
then.
board, but just with him, I'm
Right.
like, just bill me monthly. I don't want to know what the total is going to be because I'm going to pass out.
Okay.
So,
Yeah. Yeah.
so you're not
So,
alone.
yeah, I was like, oh, there, okay. Um, The other question I ask every guest in a wrap up sort of way is, so a lot of people want to get started on a big initiative, starting a practice, a growth initiative, the things we've been talking about, but they don't know where to get started. They're stuck at the starting line. Is
Right.
there maybe one or two simple practical things you could recommend that they do to get off the starting line and get moving?
I can't emphasize enough, and I, I'm hesitating because this sounds completely mercenary, but I really do believe this. It is incredibly important to write down a plan. It
Mm-hmm.
doesn't have to be of the caliber that you're going to hand to investors or put together a slide deck or anything like that. No.
Mm-hmm.
But I purposely 8 years ago created what I call a DIY business plan kit. It's
Okay.
$199, so it
Okay.
really low cost,
Mm-hmm.
purposely because I feel it is so important
Mm-hmm.
that people put together a business plan. Not only that they put together the business plan, but they understand all of the elements they need to address in
Mm-hmm.
building a new business. Because, like I said before, they may be experts in what they do,
Mm-hmm.
but building a business is a completely different skill set. And so,
Yes.
thinking about, well, what is the problem I've identified in the marketplace? And
Mm-hmm.
what is my solution? And how am I
Mm-hmm.
going to differentiate myself from the dermatologist down the block?
Mm-hmm.
And um, am I going to offer the same things, different things? And how am I going to price things? And
Mm-hmm.
how am I going to deliver certain services or experiences? And
Mm-hmm.
what are the features and benefits of my offerings? And
Mm-hmm.
all of these things. And who's going to be part of my staff? And if
Mm-hmm.
there's a management team. And there are all of these pieces, um,
Yes.
the operation side of things. Location, why are you choosing this location? uh,
Mm-hmm.
what factors are must-haves, what are nice to haves? All of these
Mm-hmm.
things need to be addressed, and in this kit is called Distilling Your Dream.
Mm-hmm.
um, and the step-by-step kit for business plans, and it is step-by-step, very linear, and in plain English and
Yeah.
complete, so that you can understand. Really, it's
Yeah.
trying to chip away at the, you don't know what you don't know, trying
Mm-hmm.
to let you know some of those things.
And
Um,
and listeners, I didn't know this. Diane was going to say this, but there's two reasons why I think you ought to get it. The first is you start where you should, which is, does anybody in the market need what I have?
mm,
And a lot of people skip over that in healthcare and otherwise. They think I've got this cool technology, and what you don't want to be is an idea hunting for a need. That's backwards. 99
exactly.
out of every 100 ideas that hunt for a need never find it. And you've just spent a lot of time and money learning that. You can just learn it now. What she was talking about was, does anybody need what I have? And if they do I have it better than my competition? You got to be able to answer those, number one. And the other reason to go through an exercise like what she has is, you can go to a bank and get a loan, and they're not going to ask you these questions. They're going to give you the money. Or if they give you the money, they're not going to evaluate your business plan. In fact, most business plan requirements from most banks never ask you about your marketing plan. They don't even ask. This is what I've learned.
They're
And
concerned
so,
about your assets that are
yeah,
going to be collateral.
yeah, all they care about is, if this thing goes under, can we take this person's collateral to get us whole? They don't
Mhm.
care if you have a winning business plan or not. That's all they care. They're not bad people, but just be eyes wide open about, you can get a loan and you could walk out there, well, I've got a great business plan. They have no idea if you have a great business plan. They just know you have enough collateral to pay them back if it goes under. Those are different answers. So whether it's Diane's link, and Diane, I want to link to it, so we'll put it in the show notes for this
Oh,
episode.
wonderful.
And but you have to challenge yourself. Does the market need what I have? And if the market does, do I do it in some way that's tangibly better or different? Well, different and better than the competitors that are out there trying to meet the same need. The answer is no, and I don't know, or no and no. Slow down and figure it out first. So that makes a lot of sense. Thank you. So that's one piece of anything else. Any that doesn't have to be, but just to, help people get off the start. And that's a great place to start. I was
You know,
thinking
I,
of, write down your number, write down your aspirations, and then stare at it and go, can I imagine? Can I
Yeah.
imagine? Or is this just totally wishful pie in the sky? And probably that plus Diane's exercise will help you. I can imagine this, because
Yeah.
you've gone through it. Yeah.
Listen, I've been in this game for over 20 years, and I am a firm believer that the reason that most businesses go bust is because they do not go through this sort of foundational
Hmm.
exercise of thinking things through
Hmm.
before they've got, the money and the customer loyalty on the line. So,
Yeah. And by the
um,
way, if you go hunting around online, you see business plan and 3 easy steps. If you see the word easy with business plan, please keep looking.
yeah.
It's just, it should take some work.
Yeah.
Cool. Diane, thank you for coming on Practice Care. Thank you for illuminating this topic. It's an important one. It's not always that obvious, and I think you've made it a lot easier to understand. So thank you very much for coming on.
Carl, thank you so much for having me. You and I are so aligned. It's
Yes.
really uncanny.
Yes. Just
So
do some
thank you.
planning. Just do
It
some
was a
planning and
pleasure.
something. Yeah. So, Diane, we're going to put all the contact information that you supplied into the show notes. I want the link to your kit as well. We'll get it in there. And a couple of other points before we wrap up. First, if you are a private practice owner and you've got an experience on the business side of private practice that you think others would benefit from hearing, or if you're like Diane or I that seeks to serve private practice owners and you've got some expertise to share, either way, we want you to come on Practice Care so that you can tell the world about it. In the show notes for Diane's episode and every episode, there's a link, a couple of clicks, tell us what's on your mind so that we can get you scheduled as soon as possible. And finally, please subscribe to Practice Care. We do a new episode every week. We're on Apple, we're on Spotify, we're on Google, we're on YouTube, we're on every major player. We're easy to find. But if you want to stay up to date with new episodes, the easiest way to do that is to subscribe. So please do so. Thanks very much. And until next time.